Gene Munster, a renowned tech analyst and major advocate for Tesla and NVIDIA, recently spoke on CNBC to discuss his cautious stance ahead of NVIDIA's upcoming earnings report. Despite his long-standing belief in NVIDIA's growth, Munster warns that short-term volatility could be a factor, even hinting at the possibility of a stock dip. Why? The anticipated revenue from NVIDIA's latest Blackwell chip may be modest initially, which could disappoint investors who tend to react sharply to any delay in product releases. Adding to the potential volatility, NVIDIA's stock has surged 30% over the past 3 weeks, nearing all-time highs. As the only game in town for AI infrastructure, backing innovations like ChatGPT, NVIDIA's data center revenues have soared, now making up 90% of its business, up from just 10% a few years ago. The numbers are impressive: a 208% revenue increase, operating income up by 1,000%, net income rising 800%, and cash up 105% over the last year, while debt dropped by 10%. NVIDIA's forward price-to-earnings ratio is roughly 34, aligning with tech giants like Google and Amazon, which indicates reasonable pricing given its dominant position. Yet with all these accomplishments, high expectations are inevitable. NVIDIA has delivered 6 consecutive triple plays, exceeding expectations in EPS, revenue, and guidance. For this quarter, analysts anticipate a 112% revenue growth and a 125% EPS increase. But with the stock already tripling in value within the last 18 months, there's a growing sentiment that NVIDIA's stock price may be victimized by its own success. If NVIDIA misses the mark, even by a small margin, the impact could reverberate across the tech sector. However, for long-term investors, Munster assures that NVIDIA's growth prospects remain as bright as ever, expecting a prolonged tech bull market driven by AI. Those with a steady hand may view any post-earnings dip as a buying opportunity. But will the newer investors, those who joined the market recently, stay calm if NVIDIA's stock takes a hit? Or could we see panic selling from less seasoned holders? As volatility looms, Munster underscores that the seasoned buyers are ready to capitalize on any drop, potentially fueling another rally shortly after any dip. Looking at NVIDIA's potential beyond the upcoming earnings, its quasi-monopoly in AI infrastructure offers strong footing for the next 3 to 5 years. And with trillions in sideline cash awaiting dips in tech giants, NVIDIA's future looks promising. While earnings could stir some turbulence, this event serves as a reminder of NVIDIA's unparalleled role in AI's evolution. So, whether you're a trader seeking quick gains or a long-term investor eyeing sustained growth, ensure you have a clear plan for both outcomes. Remember, these earnings will be pivotal, but NVIDIA's story extends far beyond a single quarter. Stay tuned, stay prepared, and as always, invest wisely.